It's difficult for a lot of traditional managers. It's not traditional for the guys who are a little bit outside the box. If you think about it, it hasn't changed since 2000 when I wrote my first book, where I said we were in a secular bear market. The markets would be flat for the next 15, 17 years. We're 2/3 of the way through that. I updated all those graphs a couple weeks ago on the website. Tonight I'm writing about earnings cycles. Our earnings growth cycle is beginning to get a little long in the tooth, but the magnitude of the growth we've had is getting ready to go off the charts if the forecasters are right, which suggests that maybe we're getting ready to see a weaker earnings cycle. Or we're going to see records.
Well, we're getting earnings beats on earnings per share, but revenue has really disappointed this quarter.
Well, but that's when you start seeing the next one is the earnings price goes down, or the earnings price per share. But that's what happens in a secular bear market. That's what makes it so difficult to trade, is because everybody wants to look at the forecast, and whatever the forecast is, it's always an extension of the current trend. That's just what, for whatever reason, that's what analysts do, and 90% of the time they're wrong.
Right.
That's the problem with following analyst forecasts.
John, when we look at these corporate earnings, a lot of people also talking about cash flow. Molly Corp, for instance, this morning saying cash flow not as strong as it expects for the rest of this year. When a company does not have the cash flow, what does that mean for its operations, its ability to stand on its own 2 feet?
Every company is different. You've got some companies that are going to be doing well in this market because their products are needed. The group that sells into ag right now, they've been getting beat. But they're going to come back because we're going to need more fertilizer. So it's probably a good time to buy fertilizer companies after everybody said, oh my God, nobody's going to buy fertilizer this year. Well, if you're investing on a this year basis in fertilizer, you're not paying attention. This is a good time to buy value on something like that.
But John, does cash flow protect you from, does it insulate a company from all the macro distractions out there?
Cash always helps. Though I have to tell you, if I was a company and I could get money at 3% for a long time, I'd be really tempted to go get it. That's cheap money. I mean, I remember borrowing money at 18%. Maybe that's just my being old and being back in those days. But I'd be putting money in the bank and tying it up for as long as I can, and hoping I could get at least the cost of it while I was there.
Before we let you go, you just came back from Singapore, a trip to Asia. What's the rest of the world look like right now to you?
Well, and I was just in Italy and Spain as well. Europe is looking worse. I mean, Draghi just didn't get it. He had to do 2 speeches, one to make up for the one that he, messed up on the first one. He didn't give us anything. But the problem is he has nothing to give. Till the politicians agree, and he's trying to force the politicians' hands to give him something to do. That's where we're going.